All right, good afternoon, everybody. It's Sunday, October 2nd. It's about 1 o'clock in the afternoon, and I just wanted to follow up on the warnings that I issued midweek and kind of give some context to why I'm switching to a more bearish perspective at this juncture. So, coming into this week, we were expecting to bottom. Or I should say, going into last week, we were looking for bottoming action, and we were hoping we were going to catch a rally up into the red box in this area at intermediate B. And we've been pretty patient so far with allowing this market to find some support, but it's just not doing it. And we're starting to see things around the world. Currencies and other nations go from kind of just systemically shitty to a little bit more acute, and people are starting to have some trouble. So at this point, I'm getting more bearish, and I'm not going to try to be as optimistic for a near-term bounce or short-term resolution to get us, any kind of a tactical bear market rally or up to any kind of new highs in the market. So what I've got on the screen is kind of what I was expecting, with the green arrow representing the area where we should have received a bounce from a tactical trading perspective. If I zoom in on the chart, let's go to a 1 hour view. What we're looking for here is what we call a larger flat structure. Let me zoom back out to a 2 hour, and that larger flat is, the A wave down that's the initiation of the flat, a B wave correction, and then we wanted to see a C wave that got us down, later on in the year or next year into the 2900 area. And right now we're failing at this juncture here, where we would see the completion of a larger B wave bounce. So we had good, we had good indications that structure was looking pretty nice at first to come into this area and get some support, but it just sat on that thing and just chewed up anybody that was willing to come in and try to save it, and that included us, right? If we were following this pattern, so we don't really have. We're starting to lose good correlations. Structure is starting to fade, right? We don't really have, we had a nice impulse into here, but we're really losing kind of cohesion as any kind of an impulse as this drifts lower. There's just nothing now that looks like a good representation of an impulse. So I'm starting to abandon that idea, or I should say I have abandoned that idea, and we're looking for patterns now that can go immediately lower, and then where would they go, right? That's what we want to know. What's the next most logical interpretation? I was lightening up in bearish positions as we moved into this area, and although I'm still carrying some things that will do well if the market goes down, I'm not at where I want to be. I'm not as heavy as I want to be, so I'm trying not to hurt myself by pivoting and getting too bearish initially, but I think the market's at a point where people are going to start to close up shop, that they've given this thing all they're willing to give it, and I think things are ready to accelerate a little bit to the downside. So let's kind of talk about where we can go from here. And to do that, I want to go to the longer term perspective. That's here. We're wrestling. We're wrestling between, are we going to get another high? Are we going to recover and get another high? Or are we already into this corrective action, right? And the red line I've got on my chart is really, useful life expectancy for a guy like me in my, middle 40s. Where am I going to, how long am I going to live? What am I going to live to see in my lifetime? And, I really think that even if we do get a little higher, we're going to see corrective action in this area, right? And we want to be very specific about when we start playing for that, right? You can blow up. I mean, just this amount of movement, you can blow up everything you've ever had and everything you will ever make. So we want to try to be as judicious as possible and play the probabilities to the best that we can. Just to rehash, I believe that the present wave is still going to be bullish for quite some time into the future, right? This is going to get sorted out, and I mean the S&P 500 is going to go to 3 million, or is that 30 million? It's 3 million, way off in the future, right? But by the time I die, I expect it to be, fighting around whether or not it's going to be somewhere in this range of where we are now, right? Still within this chop. Even if it's in the bullish phase, I don't think it's going to have eclipsed wave one, right? So really, we're going to be in this box, in this area, for quite some time. Quite a long time, in my opinion. So, getting your hopes up for making a killing on a one-way bet for the rest of your life, in my opinion, is not really relevant. I think we have to be tactical and careful with our entry points and our exit points, and be happy if we can take what we can get, and be happy that we got it, right? And learn to live conservatively. And I think that's going to be a societal shift. If we zoom in a little bit, right, we were expecting to get up into this, 6,000, 5,000 to 7,500 area. Now that's a wide range. 2,500 points is a wide range, but that was our projected area for topping in this wave. And we're not really sure what that structure is going to be. Let me zoom into a 2-week chart. Our baseline expectation was that we were in, and we still may be in, this correction that gets us back into the 3,000 to 2,800 region before the market, attempts a rally up into this red box. And it still seems reasonable. But I think we're starting to lose our support, right? It doesn't seem to want to stay up here and give us the bounces that we need to make this a reasonable looking correction. It's starting to become awful straight line, and we're not seeing support in the areas where we want to see it. So I'm becoming more bearish, and I think this is developing too quickly, to see this gather, support itself, and make another push at this high, right? And it's becoming increasingly likely to me that we are completing, or we may have completed. And we have to do a lot more correction before we can hit this area on a B wave bounce and then fall back into here, right? And that's perfectly reasonable to have an expanded flat fourth wave correction at this juncture in a bullish chart. It's crappy that it's happening to us, but it's perfectly reasonable. So to me, it's starting to look more and more like this as the days go by. I think we had reasonable expectations at that higher high, but maybe if we had just kind of gotten over COVID and let it be over and moved about with our lives, if we had perhaps not sanctioned the living crap out of effectively everybody over the Ukrainian the conflict in Ukraine, I think we had a reasonable shot at gathering and getting up to that level. But the decisions we're making and the the attitude with which we're approaching things just does not look. It doesn't look bullish. It doesn't look conducive to a good business environment, and I'm starting to. Money's shrinking, rates are rising, attitudes are getting worse. So I'm starting to take this as my primary expectation, and from this point, I would be looking at something much uglier, where the markets need to correct and get back into the top of the 2000 to 2008 area before an extended rally up into this target region, and then pulling back into to complete our correction here, sometime off in the 2050s, most likely. And that's kind of that's where I'm moving towards, right? That's where I'm moving as my baseline expectation. I'm losing faith that we can gather up here, right? I'm just not seeing enough supportive structure in here to kick this out and stop us on the next leg. So that's the long and short of it. There's still plenty of room for that to happen, but things are degrading, and I'm not seeing bullish signs. So if we zoom out back to the 3-month, right? To have a correction like that in a bullish chart is completely reasonable, right? There's nothing wrong with that. Like if you were trading a daily chart that had that movement in it, you wouldn't even bat an eye. It's just the time frame in which we're dealing and the length of time that I think this is going to take is just not good for the next several years. A natural course of action would be for this to last until 2030. Based upon what I think good movements would fit into this chart. So yes, higher can happen, but I think the balance of probabilities is beginning to shift towards this expanded flat, or I should say running flat. The correct terminology is a running flat. On the shorter term, we go to a daily view and just take this guy off here for now and just talk about what has happened so far. And I'll use just some real rough guidelines. There was opportunity for a higher high out of here, right? So the people that were immediately bullish that Ukrainian conflict was nothing and money printing was everything, had all right to expect a continued rally up into this area here. And so there'd be nothing wrong with some kind of a move that could have carried us straight there, right? With that bounce, you need to hold that bounce, right? And we came back and we took those guys out. And then there was reason to expect maybe a little bit more of a muted final push higher, right? If we could have got, maybe up into the 5,200 area off of this low, right? But rolled over from there, right? And now we're in the area where where I thought we would sustain a bounce as a larger B wave structure, right? And now the guys that were even like myself, that were even less bullish but still expecting some kind of more positive development than an outright bear market, right? So the guys like that that are trading the market in this manner, as we were approaching it, now those guys are even starting to get pushed into, right? So we weren't as bullish to take this bait, right? We expected a more muted response, and now we're getting eaten alive, right? So gradually degrading, right? Gradually knocking down the door, right? So the next place you would go, because now this pitchfork has failed, right? Now there's not really any bullish expectation I have out of this immediate pattern, right? So you would default back towards the larger pattern in the way that I would normally go about things. I would default back to the overarching pitchfork that I believe we're in, or that I had believed we were in, right? So Now I'm falling back into this guy, right? And I'm saying to myself, where do I go from here? Well, the next most likely support, the way we were approaching it to begin with, was to see this. Right, so that's the next place. By now, you should have all tactical traders essentially throwing in the towel. Right? They're done with it. They should be done with it, or they're nearly done with it. And you're going to have to move back into some value investors, right? And they're going to show up around this large corrective pattern. Right? So I think this is the next logical step. And I think people are going to throw in the towel, and I think this is going to happen in a hurry. So I think we're going to start to see some more acute selling in the markets here in the coming month, or throughout the rest of the year, because on a chart like this, anything through next August, taking this period of time through next August would be perfectly reasonable, right? So that's the next step, right? Even if you're bullish and you want to see this develop, I think this bounces over, and I think we're now into this portion. So I missed the call, but I'm hoping to gather myself up and get back on the right side here. So down into the 3,000 area would be the next most likely support area, right? But if we sell off hard into there and we don't have any positive developments by then things have the right to start getting really ugly, right? If this ends up being a weak bounce, then and people lose faith in this higher high, then this whole structure where we're forecasting this, right, up to here, is going to go by the wayside, and then we're going back. Then we're going back to 2000, 2008, right? That's the sequential approach. That's how you would approach the market from a sequential perspective with supports and resistances, and how you figured your way through it, in my opinion. All right, so this is the next. If this area fails, this will be the next thing that happens, and I think if that doesn't hold, then I think the move from here to here, it's going to be swift. Once this gives way, I think this is going to be swift. So just trying to play a tactical approach, that's what I think could be headed our way. And the overall structure for that is, let me just take this away, or let me just add this to it. Right? The overall structure for that is something like this. Right? With an alternative that this area holds and gives us a somewhat meaningful bounce, and then it just drags out for longer. Right? That's the next approach. I think it'll gain steam if it gets that far, and we might see something like this. Right? It's pretty tough. We've got a long way to go to get there, but I think this is the next way station. As far as how the market could move into that area, as I said, this area here is getting really distended, and it's really not cohesive as a impulsive structure that should bottom in this area now. So I've adopted a count where I'm treating it as a three-wave structure down, an ABC to the downside, 5 waves, 3 waves, and 5 waves again. And this can be all of the bounce that we get, or it's possible that there's one more throw up into here before we start this move lower into the 3200s, before most likely a very sharp rally, and then this all peters out down in the 3,000 to 2,900 region. And then, right, that could be, we zoom out, go to a daily. That could be everything that we were hoping for, right? Just a little bit faster in nature than we wanted it. And we got to see. We're going to have another game down here that we play, where we see if this gathers support and gives us a run. We're just going to play it level by level and see how it goes. So this is my near-term prediction, where maybe there's something ugly going to happen tonight yet into Monday, and we start the week out in the middle of an impulse to the downside. Or like I said, maybe there's one more throw up where they try to save this thing, and one more squeeze. This turns into an A, a B, and a C, and then we start it all over again from there. I'm 50-50 on whether or not that happens, so I'm not too keen to just go out there and short the shit out of the markets tonight, Sunday night when futures open. But I am going to carry what I've got and see if it can make it there. And if it stops me out, I'm going to try to not get too emotional about it and just try to regather myself up here in the 3750s and see if we can start all over again. That's my near-term expectation. Zoom out to a 4-hour. Right now, the safest bet for me is to play for that and then play for this to be a B-wave bounce. And then we'll see whether this does option A or option B. Right? Option A, what I've drawn on the futures chart is this. Right? This is the least bearish option, where we catch a bounce in here and go. But what I think will happen is if we get this, I think the NASDAQ will turn impulsive, and then we'll end up with this to the downside. So not pretty, but I'm just trying to show you guys what I see and be as honest as I can about it, and give you my backup information, so that you can make your own decision, or at least see how I'm arriving at whatever decision I'm making. So that's kind of where I'm at. If we go over to the secret indicator, we're still not where we wanted to be yet to the downside, right? We had thought we wanted a pattern similar to this, where we wanted to see this choppy pattern to the upside, followed by the market getting smoked down into the area of the dotted green line. We're still not there, right? We still have plenty of room to go to the downside. Here, we haven't turned up at all in the longer term moving average, and the short term moving average can still go a little bit before it gets down into the dotted yellow line. So we could still see something, into November, early November, before we could see, before we would really expect to see a bounce. We'd like to see this get all the way down into here before we are encouraged to jump in, at least according to how I think I've seen this indicator move in the past. And if we get bearish, then I think what we're going to see is just a pattern like, just a broadening, declining pattern that just keeps doing this over and over and over. Just keeps getting just something like that, where it's just 3 up, down, 3 up, and down, 3 up, and down, where it's just going to keep doing that, kind of like this, right? Just bigger and bigger and bigger. So I think that's kind of what we're looking for now. And this is probably going to, this correction is probably going to end up so large, if that happens, that this is probably not going to be the correct time frame in which to look at this. Right? The time frame that I've chosen to look at for this level of analysis was based upon, what I've noticed in the size of the corrections and advances within the last bull market phase that we've had, and we're headed into a potential correction that's larger than wrong chart. Sorry, we're headed into a potential correction that's not in the same context of how I had calibrated that chart to work for me. Right, so it'll still be of value, and I'll be playing with different time frames to find what I think will be appropriate. But I think we're going to find that this is not going to end up being the appropriate. This is a 2-day chart. It's not going to end up being appropriate for what we need to be, how we need to be calibrated for the size of the coming move. So maybe it'll be a week-long chart or something like that. I'm going to have to play with all these things and come up with what I think is going to be the most appropriate representation. So that's kind of where I'm at. This, in my opinion, has failed. I don't think this is happening, and I think I have to segue and find a new path forward, and that new path forward is going to be a more immediate direction down to there. Actually, it would not go quite as deep down to there, and that's going to take shape, I believe, in this manner over the coming week. I kind of think we've already got one down, wave 2 bounce, and then a 1-2 of the next wave to the downside. So I kind of think it's already started, and we might enter the week Monday morning. We might start Monday morning down here, 34.05. It's tough to say. We'll see. So I'm just trying to give you my best analysis. I'm trying not to color it too many different ways. I'm just trying to follow the charts. So that's it, guys. Enjoy your weekend.